Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome back to the Wealth Matters podcast, the go-to source for building wealth and financial wisdom. I'm your host, Alpesh Parmar, and today we are diving into a topic that's crucial for high-income W-2 earners: optimizing your taxes to keep more of what you earn. Whether you are navigating the complexities of deductions, credits, or investment strategies, we have got you covered. So let's get started. Even though there are not a lot of ways how high-income W-2 earners can save on taxes, but there are some which come to my mind, which would be, maximizing retirement contribution, health savings accounts, flexible spending accounts, FSAs, tax-efficient investing, real estate investments, of course, charitable contributions, income shifting strategies, tax credits and deductions, and advanced tax planning strategies, which you of course have to work with your tax advisor and or working with right tax professionals. State tax considerations, because I live in California, tax impact of stock options and equity compensation, right? Alternative minimum tax AMT planning, leveraging business ownership. So these are some of the strategies, and I'm going to try to go through some of them today. So the first one, maximizing retirement contributions. Let's kick things off with retirement contributions, right? If you are earning 150,000 annually and contribute the maximum of 20,500 to your 401k, you are reducing your taxable income to 129,500. At a 20% tax bracket, 24% tax bracket, that move alone will save you $4,920 in taxes for the year. And if you are 50 years or older, adding the catch-up contribution of $6,500 can save you an additional $1,560. That's over $6,000 in tax savings, all while securing your future. Again, I don't personally like 401k, IRA, etc., because I'm a business owner. But if you are a high income W-2 earner, this is one of the strategy you have to keep in mind. Second one, health savings accounts, HSAs, and FSAs, flexible spending accounts. Moving on to HSAs and FSAs, suppose you are eligible for an HSA and contribute the maximum family amount of $7,750 at a 32% tax bracket. That contribution can reduce your tax bill by $2,480. And since HSA funds roll over year to year, there is no pressure to spend it unwisely just because the calendar year is ending. For FSAs, imagine you set aside $2,750 for healthcare expenses. That can lower your taxable income by the same amount, saving you roughly $880 if you are in the 32% tax bracket. But remember, FSAs require a bit more planning due to their use it or lose it nature, but they are still a fantastic tax savings tool. Third one is charitable contributions can also offer significant tax advantages. Let's say you donate $10,000 in appreciated stock you have held for over a year to a charity. Not only do you get to deduct the full $10,000 from your taxable income, if you are in the 24% tax bracket, that's a $2,400 reduction in your tax bill. But you also avoid paying capital gains tax on the appreciation. If the stock originally cost you $5,000 and you're avoiding a 15% capital gains tax, that's an additional $750 in savings. Now let's talk about tax efficient investing. Consider an investor who reallocates $50,000 from high turnover mutual fund to index funds in a taxable account. Assuming the mutual funds generated $2,000 in taxable distributions at a 15% capital gains rate, shifting to index funds with lower turnover might reduce taxable distributions to $500, saving $225 in taxes annually. And by tax loss harvesting, selling another investment at a $5,000 loss, you could offset the remaining capital gains plus reduce your taxable income by an additional $3,000, saving an extra $720 at a 24% income tax rate. These examples just highlight how impactful strategical financial decisions can be on your tax bill. Each move requires careful consideration, but the savings can be substantial. And there you have it, folks. Real strategies and real numbers that show just how much you can save on taxes with the right moves. But before we wrap up, a crucial disclaimer. I'm not a certified public accountant, CPA, or a tax attorney. The strategies we have discussed today are meant to provide general guidance and inspire informed decisions. Your individual financial situation is unique, and tax laws are complex and subject to change. Therefore, I strongly encourage you to consult with a professional tax advisor or attorney to tailor these situations or strategies to your specific circumstances and ensure you are in compliance with current laws. Remember, the key to tax savings is not just about one-off decisions, it's about integrating these strategies into a comprehensive financial plan. By working with a financial advisor and tax professional, you can navigate the complexities of tax planning with confidence. Thank you for tuning into Wealth Matters. If you found this episode valuable, please share it with others who could benefit from our insights. Your support means the world to us, and that is what keeps this podcast going. Until next time, I am Alpesh Parmar, helping you navigate the path to financial success with clarity and confidence. Take care.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!